Hi, I'm Victoria, and I'm here with James, aka Simon Black. I'm actually recording this call from beautiful Puerto Rico. Uh, Over the weekend, James and I were actually talking about real estate on the island here because prices have been just insane. And we thought, well, why not discuss housing in general with all of you here?
Yeah, it's something that probably everybody's noticed. And honestly, in most places around the world have experienced over the last 12 months and really the last 6 months in particular, an incredible surge in real estate prices that most people probably haven't really seen. Even when you go back to the last big housing bubble in 2005, 2006, 2007, we didn't see as massive a surge as we've seen really here over just the last 6 months.
Yeah.
And we were kind of joking about it, that there are reasons that when we should talk about it, because it really affects everybody. I mean, anybody that, whether you own real estate, you own the place that you live, you're renting the place that you live, you're looking to buy something, you're looking to sell something, you're looking to invest in property, pretty much affects everybody. And we thought it made sense to explore the dynamics of that and talk about one in particular, very interesting market, in particular, which is Puerto Rico, because right now, not necessarily across the entire island, but there are some pockets of the property market inside of Puerto Rico that have become, you use the word insane. And I mean, really, it is gravity defying price increases over the last 12 months that if you're looking around in your neighborhood and you think, wow, prices have really shot up, you haven't seen anything compared to what's going on in Puerto Rico and really just a couple of neighborhoods. But we'll talk about that. But I think let's start off just with what's sort of behind the price increases. And again, this is something we're seeing worldwide. If you're in Australia, if you're in the UK, if you're in Canada, the United States, I'm in Mexico still. I mean, you're seeing it here in Mexico, you're seeing it in so many places, and there are a lot of reasons for that. One of it is really something, I started writing about this actually last year, sort of early on in the pandemic, when we started to see, well, hey, wait a minute, people are staying at home anymore. We started saying, well, people are going to realize pretty quick that if they can stay home and they don't have to go to an office anymore, very few people in the world like to commute to work. Very few people in the world. Very few people in the world love getting up early in the morning, dragging their ass, to a subway, sitting in traffic. Nobody likes to do that, really. So now all of a sudden, people have gotten so accustomed to this, and they realize, I don't want to go back. Now all of a sudden, there's all these companies saying, yeah, we're opening up, everybody, and people are like, I'm not going.
Yeah.
And some people are saying, oh, I'm still afraid of COVID. Some people are pretending that they're still afraid of COVID and just using that as an excuse to not come into work. Other people are happy to just take I mean, I'm just going to say what it is. It's universal basic income is really what it is. All the disguised as COVID relief, but it's essentially universal basic income. It's just free, welfare for all, to get paid to stay home. And by the way, that's not just in the United States. There are plenty of countries in the world that are doing the same thing, paying people to stay home. And so there are people that are more than happy to do that, saying, you know what, I'm just gonna stay unemployed for now. And whenever I feel like I can find the right job in a place that I actually want to work, in a place that's going to let me stay home and live the life that I want to live, that's the thing that's more important to me now. And that's one of those things that I think came out of COVID for a lot of people. It was every single person. I mean, nobody spent the last 12 months, 15 months, 18 months, whatever it is, the way that we've spent that time and not have changed at least a little bit in some way. I mean, it reflected on your priorities in life, reflected on the thing, and a lot of people just kind of looked at that and said, I waste way too much time sitting in traffic, or whatever the case may be. I don't want to live in this nasty, polluted city anymore. And in a lot of cities, and there are some that we write about a lot in the U.S., like San Francisco, where they go and what did we write about last week? They're spending $70,000 per tent to pitch tents for homeless people. Whereas it would cost less money to just rent them an entire apartment.
Yeah, exactly.
In San Francisco. But it was just crazy stuff where, you're in San Francisco and you go out in the streets, you got to step over feces and use drug needles and all these sorts of things. And the local government still feels that like that's got to be the priority. And
Mhm.
it's crazy. So a lot of people said, whatever, I'm out of here. In New York City, where, Comrade de Blasio spent the last 12 months exercising, very Hitler-esque powers and saying, Jews, stay home. I'm going to arrest you if you go to synagogue, but, we go to the liquor store all you want, and that's totally fine. And just weird stuff that I think was so offensive to people. And they said, what is the point of being in the city? It's all the taxes, all the regulations, all the communism, all the totalitarianism, and none of the fun, none of the culture, none of the restaurants, none of the dating scene, none of any of that stuff. What is the point? And so a lot of people said, I'm out of here. And they picked up and they moved and they went elsewhere. And so we were writing about that. And I think for a lot of people who realized suddenly, I don't have to live in the city or even the state or even the country where
Yeah.
I work anymore. And we said, that's going to be huge. And, we said there's going to be different places in the country, places that are more free, places that are more open, kind of more rural in particular. That, one of the places that we identified, we said Austin, Texas is probably going to be huge, and the area kind of around there is just going to be huge, and a lot of people are going to move. And so that's definitely happened. So this mass migration is definitely a factor in that. It would be ridiculous to say that that was the only factor, or even really the most important one. Probably the most prominent is one that we've talked about a lot, and that's inflation. And if you want more background on that, we had a lot of discussion on inflation in the past, where we talked all about how central banking works. But just as a quick recap, when we talk about the Federal Reserve, which is the central bank that prints money, what they're essentially doing, they're not actually physically printing dollars or euros or anything else, but what they do, it's all electronic basically, and they create money and use that money to buy assets, generally either government bonds or these kind of mortgage-backed securities. And the reason they buy mortgage-backed securities is because the market for that is so huge. I'm talking really tens of trillions of dollars in the US housing market, tens of trillions of euros in the European housing market. And so they can buy these mortgage-backed securities. It's very easy, in particular in the US, because they have these federal housing agencies and the banks that package all these things up. So basically, when you go to the bank and you say, hey, I'd like a mortgage, they say, sure, buddy, no problem. And they issue you a mortgage. And I mean, in some cases, within minutes, they're already rolling this thing up. They're taking your mortgage and somebody else's mortgage and somebody else's mortgage, and they're smashing all these mortgages together and rolling them up into a bond. Basically, they're turning it into a security that is, and that security is basically a bond that's backed by the mortgages, and the mortgages are backed by real estate. So there's all this collateral and security and so forth, which is one of the reasons why banks like to invest in this stuff. It's basically like a government bond, but the yield is a little bit higher in theory. Instead of making 1%, 2%, okay, well, mortgage rates are like 3-4%. So you can make a little bit more money, but you have still the security and the collateral of this mortgage that in of itself has security and collateral in the real estate. So central banks tend to buy a lot of these mortgage backed securities and these big bonds that they make out of the housing market. And what this effectively does is it supports the housing market. It means that banks now have more money. They're just swimming with cash now to go and dump into the housing market. And that's a pretty big deal, because you're talking about millions, tens of millions of people going out and buying property, and they're able to go out and we're talking about $300,000-$400,000 in terms of a median home price. You're injecting trillions, tens of trillions of dollars into the housing market. That's going to have an impact on prices. The other thing is they're going out now, and there's a lot of big funds, private equity funds, and different hedge funds and so forth that are going out and just gobbling up real estate, because they know they can get this ultra cheap financing from banks. So you have these really big funds now that are going out and they're borrowing. And, if you think your mortgage rate is cheap, these big funds get even cheaper rates. We did this a couple of years back, and I was the chairman of this publicly traded company. It was based on the Australian Stock Exchange, and yet the whole purpose of the company was to invest in the U.S. housing market. And so we got this. We bought this apartment building. And it was like an 8-figure purchase. And what surprised me is that the banks came in and the rates that they offered, and it was one of these kind of FHA U.S. government conforming loans. It was a HUD loan, and I was amazed because the commercial banks are coming in and they were offering like 2%, rates. And I thought, like, you can't even get that. I mean, this is a time like a standard mortgage rate might be like 4.5%. And we were getting something that was way less than that. And so what you'd be surprised is that big investment funds and institutional investors have access to financing deals that regular people don't have. Whereas we go out as regular people and maybe we borrow money at whatever the prevailing mortgage rates are. Big funds get to borrow it even less than that. And that's really important because what we're in right now is something that you could probably call a liquidity bubble. And by that, I mean, when you can borrow money so inexpensively, like let's say, just use a simple example. Let's say you've got a house that you want to buy, and the bank says, okay, we're gonna give you this interest only loan, right? And all you have to pay is interest, and we're gonna, and the rate is 2%, right? Well, everybody has a certain amount that they can pay, right? Because we have whatever, people have jobs or whatever it is, however they generate their income. And that's how most people generate their income, is something they get some periodic, monthly, quarterly payments, maybe from an employer, from a business, or dividends from a company they own. And, so there's a certain amount that they can afford, right? And so let's say somebody says, okay, I can afford to pay $5,000 a month. Okay, well, if interest rates are, so that's $60,000 a year, let's say. All right, so if interest rates are 2%, and you have an interest only loan, and you're able to pay $60,000 a year, that means that you can pay, it's simple math, right? But let's say $3 million if interest rates are 2%, right? So you can pay $60,000. That's $60,000 a year times 50, if I'm doing my math right, basically, or $60,000 a year divided by 2%. So that means you can afford to pay $3 million. Right? But now all of a sudden, if interest rates rise or let's say actually interest rates fall to 1%, right? So now you still have the same $5,000 a month or $60,000 a year. But now if interest rates are 1%, that means that instead of a $3 million house, now that $5,000 a month that you can afford to pay, now it buys you a $6 million house, right? So the thing is, it's not just you. It's everybody in the entire market. Every borrower suddenly is able to pay twice as much for a house. It's the same thing. It works in reverse when all of a sudden interest rates double and it goes from 2% to 4%. So now instead of a $3 million house, now your $60,000 a year only buys you a $1.5 million house, right? And so essentially the amount of upfront present value price that you can pay today for an asset varies based on essentially how much you're able to afford in a monthly payment and whatever the interest rate is. So again, $60,000 a year, just a hypothetical example, goes a lot farther if interest rates are 1% or 2% rather than if they are 4%, 5%. I think about that. I was actually, my parents came in to visit me here in Mexico. They wanted to see the baby, and they came down for a couple of days, and we're talking about housing. And I remember when I was a little kid, growing up, and my parents, the mortgage rate, they bought this house, and this is in the early 80s. They bought this house and they paid 16% interest rate, right? So you can, right? You can't even imagine. Nobody can even imagine this today. I mean, you go to Europe, and they have places where mortgage rates are negative, and you get money from the bank. You get money from the bank if it's insane, right? And so. This is the sort of thing that happens. Obviously, when interest rates are, 14, 15, 16%, and then interest rates went down, to 10, and people thought that was crazy cheap. The first house I ever bought was in 2000, it was 2000 or 2001. And I remember the rate that I paid was 7.25%. Now, this would be today considered astronomically expensive. And I remember at closing, the seller, it was this little 3-bedroom, 2-bath house. And a cute little place anyways. And it was near the military base. I was living off post. I was in the Army. It was just 5 minutes from post. And the seller pulled me aside at closing. He said, "I just want you to know what an unbelievably good interest rate that is." And he was telling me the same thing. Like when they first bought the house, they were paying 14%. And he said, we refinanced from a 30-year mortgage to a 15-year mortgage, years and years later in the 90s at some point, and we were paying 9.5%, and we thought that was this amazing deal. So anyways, long story short is that the higher interest rates go, the less you can afford to pay up front. You still have that same $5,000 a month, But essentially in financial terms, you say the present value of that $5,000 a month is a lot less because interest rates are higher. If interest rates go low, then suddenly that same $5,000 a month, you're able to afford to pay a lot more upfront. And so this is the thing that happens is the Fed has been reducing rates. Suddenly everybody in the marketplace is saying, well, hey, I'll pay more. Well, you're not the only one who's able to pay more. Everybody's able to pay more. So what happens is everybody's going and bidding and higher prices. And that's obviously been a huge thing that's been driving up prices. We talked about this in another podcast. We talked about sort of retail price inflation and asset price inflation. But this is a form of inflation, because what ends up happening is if real estate prices rise, eventually that means that other things are going to rise too. Property taxes are going to rise, because now all of a sudden the county tax assessor is going to come and say, ooh, now I get to extract more wealth from everybody. So property tax rates go up, which means the carrying cost of the property increase. And so if the cost of ownership increase, that means that eventually a property owner now has to charge more money to, if somebody owns a property and is looking to rent it out, now they have to charge more in rent because their carrying costs have increased, right? And so asset price inflation, sooner or later, and usually sooner rather than later, creates retail price inflation. So we see real estate prices increase, and this means that rental prices increase. And so rental prices increase, and that's going to directly impact people's bottom lines. And so this is definitely the Federal Reserve and central, just not just the Fed, because it's all over the world, really the European Central Bank and in Canada and Australia, et cetera, has been driving housing prices higher and higher and higher really for the last year. And what do you expect when you slash interest rates so low and dump all this money into the market and go? And even though the housing market in many respects has never been hotter, central banks are still dumping trillions of dollars into these housing market associated bonds and securities. So essentially they are supporting a housing market that is already on fire. They're just proverbially dumping gasoline on the fire. And that's actually that's an interesting analogy. And there's a great book I'd recommend. I read it a couple of months back. It's called Boom and Bust, and it's by a couple of guys who, the term that we use a lot when we talk about sort of financial markets that are totally out of whack is we use the term bubble. Mm-hmm. And these guys in this book called Boom and Bust, and they actually raised the idea of they do graphically in a triangle, and they say really it's like a fire. And if you think about what causes a fire and what causes a fire to burn and grow and spread, is you need certain things. You need fuel, you need like wood or whatever the case may be, you need oxygen, and you need heat, basically, in order to make all this happen. And if you have all those elements, a fire can just burn and burn and burn and get out of control. And if there's more, if it happens in a forest, seems to be the case every year in California, then you get these massive raging forest fires. And so they make sort of financial market analogies in this, and they say, well, you've got things like this massive money printing, in the credit system, the cheap interest rates, all that. That's sort of the fuel. That's the wood, the proverbial forest that's out there, in the heat, and then the oxygen is sort of all these people coming in at one time, buying up all the properties and things like that. So, and some of these catalysts, like people saying, I'm out of here, I don't want to live in New York anymore. And so these are things that sort of, it's the spark that creates the fire. And then, with all the money and credit out there in the system, it just spreads and spreads and spreads. And so this is the thing that's happening. And why are we talking about this? Well, I think it's important to understand what's behind it. And so that folks, sort of have, the sort of knowledge to be able to make decisions. Because again, whatever your situation, if you own a home, you're renting a home, you're buying a place, you're selling a place, you're looking to invest and, buy portfolio properties and so forth, it's important to understand the dynamics that drive prices in the housing market. And so this is one of the things that's happening. I think another point that's really worth discussing is, there are a lot of markets that are, look at the stock market. The stock market is a mixed bag. You've got some small penny stocks that are very thinly traded, and you've got stocks like Apple and Tesla and so forth, and whatever, GameStop, that have massive amounts of volume, where you've got traders constantly 24 hours a day, practically, in multiple exchanges around the world, buying and selling shares of Apple. And so if somebody all of a sudden, wants to buy a share of Apple, well, guess what? There's about 1 million sellers out there. You're not going to have any problem finding somebody who wants to sell shares of Apple. Well, real estate is not that way. Real estate is it is not a fungible asset. And by fungible, we really mean it's a financial term, meaning that all of the assets are the same. Every share of Apple that's traded on the market is exactly the same. There's no share necessarily that's different. They're all the same. They convey the same kind of ownership in the company. Well, real estate is totally different. My house is different than your house, is different from anybody else's house. And so it's not a fungible asset. More importantly, it is a relatively illiquid asset in that it takes time. There's a lot of structural costs associated. You got to have a broker. You got to sign tons of papers. Anybody that's ever bought a house, and you got to sit in a blood-sucking lawyer's office for 5 hours signing papers and all this stuff. It's not as easy as just calling up a stockbroker and saying, sell all my shares of Apple, or punching in some keys on your interactive brokers account or whatever it's selling your shares of Apple. So it's a lot less liquid. And the other thing is that housing can also be a lot more emotional than other assets, because we live in our homes, and so we a lot of times develop emotional attachments to our homes and our assets and all the work that we put into that. And so that drives some interesting dynamics in the real estate market that are different from stocks and bonds and other commodities and things like that. So last year in particular was really weird, because there was a lot of activity that didn't take place. Summer is usually a big time where people go out and they buy and sell houses. This is very popular because people know if they've got kids, they want to move in the summertime so they can enroll their kids in the school before the year starts and all that stuff. And so that's a really kind of peak season. But everybody was locked down last summer. And so there wasn't a whole lot of activity. There was very little activity compared to what a normal sort of housing activity year would look like, a normal housing activity summer would look like. And so because of that, you had, if you can imagine, a lot of people saying, all right, I'm out of here, I'm moving, I'm going. And at the same time, leaving certain places like, let's say, San Francisco, like New York, and trying to move to some other places, maybe whatever, Austin, Texas, or outside of there, or somewhere in maybe more rural Florida, or or in the exurbs somewhere. But on the other side of that transaction, there weren't that many sellers, because now you had a lot of people that are like, you know what, I'm just going to stay home. I don't know what's going on. I don't feel like moving. I don't want to have movers come to my house, and I don't want to get their COVID or whatever, it was a weird time, right, last year. And so you had prospectively a lot of buyers and not a whole lot of sellers. And that creates, a supply and demand imbalance that pushes real estate prices to go up. And that was in many respects probably the spark. On top of that, you had the central bank printing tons of money, reducing interest rates, which make it a lot easier for people to borrow. And if they have, it's cheaper to borrow money. That means, hey, I can afford to pay more. I can afford to pay $5,000 a month, but now my $5,000 a month means that I can pay a lot higher price. So I'm going to bid a higher price for this property. And so because you had very few properties changing hands at a higher price, suddenly people kind of looked around and said, oh, look, the housing market's going up. And that sort of begins to set this emotional expectation. Everybody sort of gets anchored to this idea that real estate prices have gone up. But remember, it's an anomaly. It's not real. Anybody that's ever sort of, if you have a lot of experience in the stock market, maybe you've invested in some, I don't want to say penny stocks, but let's say, more illiquid stocks, companies that, in some cases maybe can be worth, pennies or 50 cents or whatever. And by the way, there's nothing wrong with that. There's a lot of exchanges in the world where a lot of companies do trade for pennies or pence. In London, for example, it's very common for companies to trade at less than a pound. It's not a big deal. It's very common in Australia, in different places. But sometimes these companies can be very thinly traded, very illiquid. I mean, it's not Apple, it's not Tesla, it's not whatever Google stock, where there's bazillions of investors. There's very few investors that are actually buying and selling those shares. And so because of that, if you come in and you say, I'm going to buy $100,000 worth of this stock, you actually move the stock price, right? You personally create so much demand because there's only a handful of shares that are being traded in a day. And so you coming in and wanting to buy a bunch of shares, you create, you personally, just with your order, you quintuple the normal demand that there would be for the daily stock volume. And so because of that, your order moves the stock price up. So you see this a lot with thinly traded companies where some things will happen, some investors will come in, and suddenly the stock price doubles, triples in value. It's not necessarily to say that the company's realistically worth 3 times as much as it was the day before. The reason that happened is because the stock is so thinly traded. And it's kind of a short-term anomaly where all of a sudden there's a lot of people wanting to buy. There's not a lot of shares for sale. And so that means that the stock price really rises very quickly. But then what happens, the stock price rises and then people that own it go, oh, I got to sell. And they start selling and the stock price starts to come back down. Usually higher than it was before, but not, the 2, 3, 4, 10 times as much as it was. That's a lot of times how housing works, especially in an environment like this, where you had very few transactions in a very illiquid market. That all of a sudden it's like, well, now you have, a lot of buyers, very few sellers, and a ton of money in the marketplace with very low interest rates, and that meant prices went up. And all of a sudden people kind of looked around and said, oh, look, prices are up. My house is worth, 30% more. It's like, well, not really, because if everybody in the country tried to sell their house all at the same time, of course, it's not going to be worth 30% more. You're going to have to take deductions and price cuts and so forth in order to do that. It was simply a question of supply and demand. And there was a lot of buyers, a lot of money in the marketplace, and not a lot of sellers. And so, that's an important part of the dynamic to understand. There's another concept I think that's important to understand. I think in human psychology and investor psychology is that sellers become people that own assets become very hesitant to sell when they see prices are rising. And the crypto market's a great example of this, right? All of a sudden, the higher, remember this the first time around when Bitcoin was going up, it was 3,000, 5,000, 10,000, 15,000, and nobody was selling because everybody, when you see prices rising that quickly, people are like, I'm not selling because this is going to 50, this is going to 100. And people have it fixed in their mind that whatever the price is today, it's just going higher. And people, like, nobody wants to be the sucker that sells too early, right? So they hold on to it. And what ends up happening is it's the same on the other side. If you're a buyer, if you're somebody that wants to own that asset, and you see, oh my God, the prices are going up, they're going higher and higher. So you've got the sellers that don't want to sell because they think the price is going higher. And you have more and more buyers that want to buy because they think the price is going higher. So now you've got a ton of buyers and no sellers. And so what happens? The price just gaps higher. It just surges higher and higher and higher. And it becomes this, reflexive sort of situation where it's just the demand, the supply and demand imbalances create even more supply and demand imbalances. The higher the price gets, the fewer people want to sell and the more people want to buy. We see the same thing in housing. You start seeing a lot of people who just, like they haven't even thought about selling their property. They have no interest in selling their property, but in their minds, they look around, they see, right, oh, the house down the street sold for, whatever. And so in their minds, they've now mentally anchored themselves to the value of an asset that they own. And now they've mentally sort of already on their mental balance sheet, they've already decided that they're $50,000 or $200,000 wealthier because the house down the street just sold for, whatever price. Just as we don't give investment advice, which is just not what we do. I would caution people, however, just from a sense of kind of investment professionalism, always detach yourself from that. Don't ever get it in your head where you really start to believe that, this asset is worth X, Y, and Z because, especially with housing, because somebody down the street had this, or somebody down the street said that. If you have an offer in your hand and an earnest money check and a contract and all this stuff, okay, now you can put it in your head that that's what it's, worth. But it's very difficult because these things do, can and do, swing in all sorts of different directions. And a lot of times when people start to think, oh, my house is worth X or my asset is worth Y, it starts to create a little, people start to act irrationally. And when we're dealing with money, it's always best to detach emotion from financial decisions because emotional decisions in general tend to be very bad decisions, especially emotional decisions about money. So, but this is a sort of thing. We see rising prices creating scarcity. We see a lot of demand, not a whole lot of supply because of that scarcity. So that's driving prices up at a time when central banks are saying we're going to slash interest rates and all this stuff. And so, yeah, of course, that's all those things together is that sort of underpin the dynamics of what's driving real estate prices higher. Many of those things are anomalous, right? Eventually, what's going to happen? Well, for one, and generally, a lot of investors, they say, is a common saying, they say that the cure for high prices is high prices. And conversely, the cure for low prices is low prices. And so what happens, like back in 2000 and when was that, 2008, I think, when the price of oil was like $144 a barrel, what happened? Anybody with a postage stamp sized lot was drilling, trying to get oil out of the ground because they thought oil's 100, and so you had all these people all of a sudden drilling for oil and created a massive amount of supply. And so now all of a sudden the oil market went from being undersupplied to being massively oversupplied, and the oil price tanked, right? It's the same thing. And, whatever, sort of when you start seeing crazy high prices, it attracts people to get into that industry, that sector, that business, that commodity. And so when you see housing prices going to the roof and people start saying, oh, there's not enough supply, well, there's plenty of supply. It's not like there's not enough houses. If you look at the US market, people keep saying there's not enough supply. That's ludicrous. Are you telling me that all of a sudden there's an extra 50 million people? I know there's issues at the border, okay, fine. But are you telling me there's all of a sudden, tens of millions of new households that have been created? No, of course not. That's silly, right? A lot of those households are relocating, right? People are leaving San Francisco, New York, and New Jersey, and whatever, Detroit, and different places, and then moving. But there's plenty of houses in the United States. It's really fundamentally an issue of not enough sellers and a lot of buyers. And so whenever you get in a situation like that, what happens? Well, the entrepreneurial spirit within people kicks in, and they say, I'm going to start building houses. I got some land that's been in the family. I'm going to put some houses on there, and I'm going to sell them, and I'm going to make some money. And that's to be a very smart idea for a lot of people to do that, who have the experience and the know-how to do that sort of thing. So this is going to be the thing that happens. You're going to see a lot of builders that are going out, and this is one of the things that happened in the early 2000s. Is I got to the point where it was just this massive oversupply now of houses. They went from being undersupplied to being oversupplied because there's so many builders. A lot of input costs went down as well. Last year and earlier this year, even, there was a surge in speculation in a lot of commodities, like lumber, for example. And we even wrote about this. We said the price of lumber has never been higher. But at the same time, lumber prices were in financial terms what's called backwardation, meaning in the futures markets, next month's price is lower than this month's price. And the month after that is lower than the previous month. And so if you look at it, lumber prices were actually getting lower and lower and lower. Now prices have come off so much in lumber, which is obviously very important raw material that goes into construction and housing. And so it takes time for retail consumers who are going to Home Depot and Lowe's and whatever sort of hardware stores in your home country to feel that, because the big stores, like, they're not going to change their lumber prices every day. That's crazy. They're not going to do that, but over time they'll change the prices up and down. But if you're a big builder where you're getting your lumber from a distributor, you're getting your lumber directly from a sawmill somewhere, your input costs on housing, some of your input costs have gone down quite a lot. Other input costs have gone up because now it's more difficult to find plumbers and roofing contractors and things like that. So it's a little bit of a mixed bag there, but it is definitely going to attract more people to build more houses. One of the other headwinds in that, though, is going to be permitting. You're going to have a lot of governments that are, just totally idiotic in the things that they do. You've got, in California, they've added a lot of input costs, the permitting, the water issues they're having in California now, yet another historic water crisis in California now that's going to make it a lot more difficult to get housing permits in California. Now you've got to get the solar and all that stuff. And I have nothing against solar. I have solar on my house, on the house in Chile where we live, the farm. It's great, but it's definitely more expensive. And that adds a lot of cost and just a lot of slow bureaucracy that's gonna keep that stuff a lot slower. So there's definitely a case to be made that you could see housing prices kind of stabilizing, because eventually, as the summer season runs out, a lot of people stop buying, that buyer demand is going to decrease, and a lot of sellers are going to start saying, like, hey, we should probably start selling. And so some of those supply and demand imbalances will work themselves out. You probably see more housing, new housing units coming on as people want to take advantage of these high housing prices and they want to sell more. So you could see that, and there's some other headwinds that kind of prevent that a little bit, but it's I think the biggest factor really, if you go back to that forest fire analogy, is how much, are we still in the middle of the forest? Is the Fed going to keep dumping more gasoline by buying more of these mortgage-backed securities and throwing more money at the housing market, slashing interest rates and so forth? Well, the Fed recently came out in their last big announcement. They said, well, we're going to keep interest rates low until, probably at least 2023. So this gives you a little bit of a sense of where things stand. It's entirely possible they could try and cut rates further. It's possible they take rates negative. It hasn't officially been done before. We have had negative interest rates in the US, both on a sort of nominal and real basis. We have negative real interest rates right now, big time. By that, I mean, when you adjust for inflation, interest rates are negative. However, even there was a period last year where we saw interest rates on 28-day T-bills were actually turned negative. And I remember I called you, we took a screen capture of that, just to be like, oh my God, yeah, I've never seen this before. So there's a case to be made that sure, the Fed could cut interest rates even more. There's a case to be made they keep things stable. And if they keep things stable, if they keep rates sort of where they are, they start to taper off some of this money that they're throwing in the housing market, we could potentially see, especially because I think they'll come under some political pressure because housing prices have gone up so much. And so they could start to taper that off a little bit. They could, stabilize some of that. And as there's more sellers that enter the market, fewer buyers, more houses coming online from builders and so forth, we definitely could see a kind of a stabilization in that. But, there definitely are some factors that could persist there. We could see, especially if they, inflation just continues to get out of control and they say, oh, the economy's starting to collapse, the economy's giving way. I mean, it is ridiculous the way they think about these things. And they look at the unemployment rate and they say, oh, the unemployment rate's rising, which it did. The unemployment rate ticked up just a little bit. And so they use this as an excuse to provide more COVID relief, to pay more people to stay home. And so they say, we got to keep paying people in this COVID relief because the unemployment rate's high. But one of the reasons the unemployment rate is high is because they're paying people to stay home. And so you never fix that problem. You just never fix that problem. So, and again, it's not just in the United States. You see this in a lot of other countries. This sort of, this just totally, just lunacy in economic policy, and the way they think that they can just paper over all these problems by just printing tons and tons of money. And so it's not something that's going away anytime soon. What I wouldn't expect is, what would cause housing prices to just sort of fall? What would cause housing prices, and not a little bit, I'm talking fall back, 20, 25, 30%. Well, there'd have to be a dramatic increase in interest rates. And there'd have to be a ton of people all of a sudden just flooding the market at the same time with their homes. And again, houses don't really work like that. People usually, it's not like Apple stock or crypto or something like that, where people can just respond to an increase in price and say, okay, I'm dumping my stock, I'm dumping my crypto. You generally have to have a reason to move, unless you have a very large investment portfolio, in which case you go, okay, now's the time. Now we could see that there could be a lot of funds, and there have been a lot of big funds that have loaded up on US housing in particular over the past several years. And so we could see some of these guys go, wow, I'm up so much. And now it's time to cash out, because they're looking at this thinking, I've got a 18-month window, let's say, before the Fed really starts, raising interest rates. And we talked about why that's ludicrous, and the Fed's probably not going to be able to raise interest rates a whole lot, but some people probably believe that. And the Fed's going to start raising rates to say, I got 18 months to sell, at record high prices. And so maybe they start, and they own so many units, these guys that own hundreds of thousands, millions of units sort of collectively. And so if you have all these funds that start dumping their portfolios at the same time just to cash out, sure, that could be something that might drive prices a lot lower. So there's a lot of factors there, and it's very difficult to say kind of exactly what's breaking out. But I think it's definitely important to pay attention to the Fed. It's definitely important to pay attention to what a lot of big funds really are doing, because those are, I think, some of the key factors that are going to drive prices higher or lower. And I think in the meantime, if you're sitting on sort of a record high home price and you feel like I don't want to sell, but I would love to take advantage of this, in a well-developed economy, whether you're in the UK or again, Australia, New Zealand, the United States, Canada, I mean, there are plenty of options to get whatever home equity line of credit, or at least you have the option to go and tap that excess equity in your home. All of a sudden you've got a couple extra $100,000. Doesn't hurt to at least have access to that. Usually there's very little, it is very, very low cost to do that because the banks have to be very competitive in that. Or even home equity loans or these sorts of things. If you actually have a real use for that capital, that may be an option. And I think as well, we can get into some of the builder and business opportunities, but it probably makes sense to talk a little bit about, maybe that brings us to Puerto Rico.
Let's bring that to Puerto Rico, because there are other factors here than what you were just discussing.
Yeah. So Puerto Rico is very interesting because I'm a Puerto Rican resident. I've been, even though I'm not there right now, I'm on a just temporary hiatus because we had our baby here, as I told you about last week. But I've been living there in Puerto Rico since 2018, and it's an interesting place. I make no qualms or apologies about the reason that I live there. There's very attractive tax incentives for really anybody. And yes, sure, if you're a US citizen, a US taxpayer, you get the most benefit, but I would be completely candid and say, I don't care where you're from. If you're from India, you're from South Africa, you're from Bangladesh, you're from Russia, you're from Bulgaria, it doesn't matter. You can get a ton of benefit, especially through the corporate tax incentives. The individual tax incentives are for investors, and it primarily benefits people that generate their income through capital gains in financial securities, cryptocurrency, these sorts of things. So if you buy, sell stocks, bonds, commodities, options, crypto, et cetera, you can do very well. Even private equity, venture capital, et cetera. I mean, you can do very well if you do that as a Puerto Rican resident, because effectively you have no tax. You have no tax. It's all qualifying income, and your capital gains that you generate from the sale of those investments. It doesn't include dividends. If you're generating dividend income from, or rental income or something like that, that's still taxable. And dividend income is generally taxable in the country where the dividend was paid, but the capital gains are generally taxed in the country of residence of the investor. It doesn't include real estate capital gains. So let's say you're living in Puerto Rico and you're buying and selling property that's based in Argentina. You're going to pay tax in Argentina. That's real property based in Argentina. But if you're buying and selling financial securities traded on the London Stock Exchange, that's a tax-free transaction for residents of Puerto Rico who've gone through the investor incentives. Then you've got the corporate incentives, where you set up a company in Puerto Rico that's taxed as a corporation, and you're subject to a 4% corporate tax rate plus a very small municipal tax rate that, it's a fraction of a percent, it's nothing, on qualifying revenue that's considered to be a service that you're exporting. And this is something that most people find they can fit a lot of things within their business under these incentives. This is why you see, now it's becoming popular for, I hate this word, influencers to move there. People who are, professionally take butt selfies and believe that butt selfies somehow have influence on other people. Yes, you're providing a service, and so whatever. And so a lot of YouTubers, whatever, they're starting to move there, and they do that because they structure their. And look, I mean, people that provide legal services, tax services, marketing services, whatever, management services, all sorts of things. Have moved to Puerto Rico, set up companies there, and are able to do that whatever activity at a 4% tax rate, again, plus a very small fraction of a percent municipal rate. So it's very, very attractive. That's absolutely why I live in Puerto Rico. I've also come to really enjoy living in Puerto Rico. I tell everybody, there's definitely a lot of disadvantages, but there's a lot of advantages too in terms of the lifestyle. I love the local culture. It's very, it's a very just welcoming place, and I really enjoy it. The other people there, the expat community is fantastic. I mean, you spend a lot of time there. I think, you've met some really
I
close
feel like,
friends.
yeah, that's the biggest advantage for me because I don't take the tax, that the taxes don't apply to me here, but I love the community here. Yeah, for
Yeah.
sure.
Yeah. I mean, you just had a big dinner with some of our members the other night. Yeah. So there's a lot of advantages there, but I mean, I think a lot of people come obviously for the tax benefits. There's absolutely nothing wrong with that. It's no different than somebody who says, I'm going to move from California to Texas because I don't want to pay state income tax anymore. Or I'm going to move, or it's the same thing as saying I'm going to move from Texas to Puerto Rico because I don't want to pay the national tax anymore. There's nothing wrong with that. It's a perfectly legal, totally legitimate thing. There are going to be plenty of people that don't like it because in this day and age, there are people who feel entitled to your stuff. They think that they should have a claim on everything that you've done and achieved and built in your entire life. And I always wonder, where's the line? Do you, if you feel entitled to somebody's wealth, like, do you get to stay in their house? Do you get to drive their car around? Do you get to do, I mean, like, what is the limit to, like, what, how you get to dip into somebody else's life in your sole discretion? I mean, it's a really weird, kind of view. But nevertheless, that's the world that we live in. But what's ended up happening is there were 2 cycles of it, and I witnessed it because I spent basically all of last year in Puerto Rico. When the lockdown took place, I was in Puerto Rico, and I didn't leave. It started in early summer, and there were a lot of people from New York that came down, and I live in a community where it's right on the beach, and it's gorgeous, it's very luxurious. And a lot of people, we started seeing a lot of tourists who were coming and just renting out some houses that were on Airbnb or whatever, because they said, you know what, if I got to be locked down, I'm going to be locked down in a place where I can walk outside and go on the beach. And so the demand started to increase just on the rental side. And so all of a sudden you had all these people that were like, hey, I'm renting out my property, I'm making tons of money, the demand's really great. And so they started seeing an uptick in rental prices. Then you had these people that started saying, hey, this is great, I should just buy one of these properties, this is pretty cool. They started learning about the tax incentives, going, that seems interesting. And so you start having more activity on the sales side. Well, then lo and behold, the election came and went, the inauguration came and went, and we have now a lot of people who are rightfully concerned about, especially in the US, are rightly concerned about dramatically higher tax rates. And what it's basically turned into is just I mean, you could practically call it a refugee crisis. I consider them sort of tax refugees. People saying, I got to get out of here. They're in California, where they proposed wealth taxes, exit taxes, ever higher income taxes. And people are like, I got to get out of this place where every time I walk outside, I got to step over drug needles and feces and all this sort of thing. And spending $70,000 per tent, to house homeless people in a tent, that should cost $199 at best, and this is government spending at its finest. And you have now all of a sudden so many people that come into Puerto Rico. And the thing about Puerto Rico is that, especially, the island is gorgeous. It's really gorgeous. Internally, there has been a lot of damage. A lot of that was because of the hurricane from a couple of years ago that just wiped out so much housing, et cetera. Just really wiped it off the island altogether. And a lot of those people just left. And so they got sort of falling down, dilapidated housing. It's people that just don't even live there anymore. And the other thing is just basically a 10-year economic depression that has plagued the island and still continues to do so to this day. And so the infrastructure is, the roads have gigantic potholes and all these sorts of things that they say haven't been able to go and maintain anything. The roads, the street lights, any of these sorts of things. It's because of that, like for people, that especially maybe they're accustomed to, living to, whatever, even something that's more upmarket, upper middle class kind of neighborhood. There's not a whole lot of that that remains on the island because of, again, some of these conditions. And so the supply is very scarce. we go back to the supply and demand imbalance, and now all of a sudden you've got so many people that are coming down because they're trying to take advantage of the low taxes and everything, and get that set up before, you know, their tax bills increase. And a lot of people are doing so quite frantically. And so they're coming in there. It's like, I got to buy a place. I got to get a place in Puerto Rico. And I started seeing this late last year of people just buying properties sight unseen. Where I live, they had a bunch of lots for sale. And in October, November, I remember I was talking to him. I said, okay, I'm going to go down to Chile. I'm going to go down to the farm. I'll spend like a month or two there. When I come back, you know, we'll do a deal. I'll probably buy one of these off of you. And they said, okay, cool. I came back and I talked to them, and they told me that they had taken them off the market and then, you know, made a few some subtle changes, reintroduced them back on the market at 3 times the price. 3 times the price in basically a 2 to 3 month period. You know, and you know, I thought they were a little pricey before, but I had kind of just about talked myself into buying one, and then all of a sudden they went up 3 times the price. And it turns out that's nothing. And you know, there was so there's basically the highest end places on the island, and one that probably the one that's the most famous is called Dorado Beach Club. A lot of guys live there. I used to live there. It wasn't for me. I left. It's not my scene, but I had a nice time, you know, living there. But a lot of people live there, and you know, it's a lot of people like it there because it's quiet. It's you know, it's in a nice town. It's on the beach. There's a lot of golf courses there. There's, you know, and most importantly, I think for people with kids, is there's a very nice private school there nearby, and so there's only so many units available. And so these guys that have been coming down, they're like, I got to go to Dorado. I got to go to Dorado. And so prices in this particular community have gone up to, you used the word insane earlier. Yeah, absolutely insane levels. And so, yeah, so there was a picture. Yeah, so there was a place, the one that I was renting, and it was a beachfront condo in Dorado, and I was renting this place, and the seller, I found out it was for sale, and they were asking me like, oh, you should buy it, and I'm like, nah, it was okay, but again, it wasn't really for me. I like more space, and you know, it was just the layout was a little bit weird. I mean, I had my office set up in this sort of back room, and you saw, I mean, I used to call it the Bat Cave because there was just no light in there, and it was actually kind of depressing. It's like, you know, it's like you live in this beachfront condo, and I spend my entire day perched on a bar stool, like in this back room with no natural light. I mean, it was just kind of weird. Anyways, at the time I could have bought it. It was available for sale. He was asking whatever he's asking, but they told me sort of his rock bottom price was $3.5 million. And I'm like, you know, that feels expensive for what it is, especially when, you know, when you don't really like it that much. I mean, you like it, but you don't really love it. It just seemed like that's, you know, I could find better things to do with my money. Well, not necessarily that exact unit. It ended up selling for a little bit higher than that, and I don't think it's that exact unit, but another similar unit to that just went on the market for $13 million. And when you do the math on a sort of a per square foot basis, it is basically equivalent to what you would pay in Monaco. And Monaco is the most expensive real estate market in the world. In many respects, the two are kind of similar. The reason Monaco is so expensive is because you have, if you've ever been to Monaco, it's a really interesting place. It's sort of carved in. You've got the mountain and the sea, and then jammed in between the two is this kind of principality, nation state, you know, city state that, you know, has these houses and condos and you know, mostly condo towers there. And in Monaco, if you're a resident of Monaco, you don't pay any tax. And so obviously this is very attractive to very wealthy Europeans who want to live tax-free in the south of France. It's a very, very attractive proposition. So because of that, they're willing to pay enormous amounts of money for the real estate, to be able to live there. And so because of that, you start seeing prices that are, you know, $40,000 per square meter, which is, you know, easily twice as much as New York City. It's more expensive than, London, than Tokyo, than Sydney. Well, that condo I was telling you about is priced at $40,000 a square meter. $40,000 a square meter. So
Nothing
it's more
against,
expensive,
yeah.
more expensive than New York, more expensive, Manhattan, London, et cetera. And,
Nothing against Puerto Rico, but I don't think this is Monaco here.
yeah, I mean, it's not exactly the same. It's not exactly the same thing. So, and it's an interesting dynamic as well, because whereas Monaco, one of the big reasons why I say they're not the same thing is because Monaco's landlocked. It's not like there's some 300-acre, or 1,200 acres swath of land in the middle of Monaco that's undeveloped. It doesn't exist. So, you can scratch out a couple of square meters here and there, but that's about it. In Puerto Rico, there's a ton of land all over the place. I mean, most of the island is undeveloped. And so, it is a very interesting dynamic. And I think a lot of purchases are, I get it that a lot of people are saying, I got to get out of the States. I got to get, a lot of that is, I think, emotionally driven. People that are really, they're afraid. And again, when we're afraid, when we're emotional, we tend to make sometimes irrational financial decisions. Sometimes it's completely rational, and somebody feels like somebody thinks that, oh, I'm about to sell my business for a ton of money. And because of that, if I get all these tax benefits, I don't really care if I overpay even by a wide margin for this, place, because the tax benefits are going to, more than offset that. Okay, that may be true. I would actually say it's not true, because the IRS has very strict rules about, this is totally unrelated, but as an aside, one of the biggest misconceptions about Puerto Rico's tax incentives is that people think that they can take an asset that's already appreciated, or an asset, let's say you have a business and you're about to sell your business. Somebody's come along and said, I'm going to offer you this, this huge amount of money for this business that you've owned and operated for 10 years. And people think, great, I can move to Puerto Rico and take that whole gain tax-free. Absolutely not. Absolutely not. The IRS has a formula where they actually break it down. They say you have to take the proportion of the number of days you lived in Puerto Rico versus the proportion of days you lived outside of Puerto Rico, and just plug that into this formula. And that's your tax bill. And so if you lived 99% of the time in the United States and moved to Puerto Rico just before closing, then you'll pay, you'll get basically like a 1% discount on your US capital gains tax. So you still absolutely have to pay US capital gains tax. So don't think for a minute that you've got something that you're about to sell and you can move to Puerto Rico and all of a sudden sell it and pay zero income tax on that under the individual incentives. You absolutely cannot do that. And the IRS is actually going to start cracking down on that. A lot of people think they can do that. And so what they're doing now is they're overpaying for property, and they're going to get hit with interest and penalties and still the US tax bill they're trying to avoid. Some people are trying to do some creative structuring where they're taking consulting payments into their Puerto Rican company. We're not going to get into that. Needless to say, there's some people that are they're going to get audited, and they're not going to like the results of that, because the IRS, as much as we, sorry, hold on. I had a call come in. As much as we like to beat up on the IRS, they're actually pretty smart, and they see a lot of these things. They go, no, sorry, you're not getting away with that. So there are a lot of misconceptions to the tax incentives, and I think that anybody who participates in that stuff really needs to have the proper advice before you go and do that, and especially before you go and deliberately massively overpay for some property. But yeah, Puerto Rico has because of that, has some very unique dynamics, and it's kind of these little microcosms within Puerto Rico, these handfuls of neighborhoods that are very attractive for expats. Has driven these places, particularly, to be some of the most expensive real estate in the world. I would say, I don't know, should we talk about Puerto Rico for a couple of minutes? I know we've been at this for a while.
Let's just turn that frown upside down. It's not all that.
Turn the frown upside down.
It's not like, I imagine there are a lot of people listening and thinking, well, I would have wanted to come here, but now with everything that you're saying, I probably won't. But I think there are still pockets of opportunity here on the island.
So a couple of things, I think. Number one is we've said this a lot, we've written about this a lot. When the window of opportunity for something opens, your worst enemy is procrastination. And I think over the last several years, there are a lot of people that sort of looked at Puerto Rico and said, oh, wow, that looks really interesting. I got to think about that. I got to do that. I got to look into that more. And then whatever, all this time passed. And all of a sudden, I'm not going to say that, oh, you missed it or the door's closed. Absolutely not. There's still plenty of opportunity in Puerto Rico. But the fact that in some of these key areas, prices have gone up so much, it should be a little bit of an alarm signal to say, don't procrastinate, because when you procrastinate, sometimes the window of opportunity closes. Now, I think in Puerto Rico, there's still actually plenty of really good places to go. I think there's some up and coming places that it's interesting is that, a lot of the expats, their thinking sort of stops, sort of within plus or minus an hour of the airport, an hour of San Juan. Once you get past, sort of Dorado on one side and maybe Luquillo, whatever on the other side, like that's it. Nobody really thinks much farther past that. Yeah, it's like, why would anybody go past that? And so you go a little bit farther, to like Isabela, Aguadilla, some of these places, you start finding, and there are a lot of expats that live in Rincon, way out on the west side, but sort of in between, and it's still on the coast, it's on the north coast. I think it's the prettiest part of the island. Honestly, I went out there, I looked at a property in Isabela, and we just sat there watching, we're on this sort of cliff overlooking the ocean. There were whales, out there. I'd never seen whales in Puerto Rico before. The side of the island where I live, we don't have them. But yeah, I mean, it actually reminded me, I mean, I know, the South African coast very well in the Western Cape. That's actually what it reminded me of. It reminded me of the Western Cape of South Africa. It was gorgeous out there. Another sort of up and coming place, I think the entire south side of the island is completely ignored, totally and completely ignored. And so it's interesting, and where you can still find there's a lot of property available. It's there's a lot more value out there. And again, I think that there's a ton of opportunity again for people that have the experience and know-how in development and construction and so forth, because the demand is so high. And I think that's, there's definitely a case to be made that could continue for the foreseeable future. So, I think anytime you see that sort of supply and demand imbalance, it does create, I think, some business opportunities. And yes, for people that are actually willing to go and do their homework and spend some time, you'll find there are some pockets of value in different places on the island. It might be a fixer-upper, it might be something that you have to put some work into, but you'll definitely get a lot more value for the money, outside of that. So that's definitely still alive. With Puerto Rico, I think the thing to think about is, statehood is always a perspective issue. Last year, Puerto Ricans technically voted for statehood. There was a referendum on statehood, and the Puerto Rican people went to the polls and they voted. And according to the count of the ballots, which is always correct, there was a slight majority for statehood. That doesn't necessarily mean that statehood is going to happen. In fact, it's probably more likely that it doesn't happen than it does. In order for statehood to happen, that's going to have to be passed by an act of Congress. So both the House of Representatives and the Senate would have to approve it and get voted into law. That's unlikely, just given a lot of things that there's been so many things that have been very, very contentious in the Senate. As long as the filibuster is in place in the United States Senate, they're going to have to get 60 senators on board with it, and they're not going to get 60 senators on board with Puerto Rican statehood. If they get rid of the filibuster, that's potentially, might potentially happen, might be more likely, but that's really the biggest thing that could derail this is statehood, because then anybody that's in Puerto Rico, okay, maybe you have zero income tax in Puerto Rico, but if it becomes a state, now you've got to pay the federal tax as well. So the fact that you have this nice tax incentive in Puerto Rico is basically like saying, well, I don't have any state income tax, but I still have to pay federal income tax. So that would go away. Mm-hmm. The other thing, and they're trying to, you're going to see, I think, a lot more bad press about it. I mean, you just sent me this, what was that, CBS video or somebody, yeah, it's on YouTube. What are these guys talking about again? How terrible it is that there are people in Puerto Rico, generating benefit. And this is, to me, this is actually I think this is, in many respects, this is sort of it's so emblematic of the way that Western society, in particular the US, is going. It's this whole concept of somebody else has something and I don't, therefore I have a problem with it. Somebody else, it's like, it's just this whole, it's the whole concept that drives, this, it's not even Marxism, because, Marx didn't like capitalism, but he didn't despise wealthy people. He didn't look at wealthy people and say, you are the worst scum of the earth and I wish you would die. Even Marx wasn't like that. He hated the system, but he never made it personal. And this is actually an interesting thing, because all these people now, they make it personal. They go out and this, the worst guy in the world is Bezos. And the next worst guy in the world is whatever rich guy. And the next guy is the next rich guy after that, and all these guys. And this is, I think, one of the reasons why so many of the billionaires have to show that they're on board, that they're woke, that they're out there saving the world, that they're, look at all the things that we're doing for COVID and the environment and all these things, because they're trying to get their street cred up so they don't get shat on. So, but, they don't want, nobody wants to end up in a guillotine and be publicly executed, in the revolution. Right. So they act like they're on board with all this kind of stuff. And that's a whole separate argument. But anyways, I think that this idea of like, somebody has something and I don't, therefore I have a problem with it. Somebody has, somebody else is, Bezos is rich and I'm not, therefore he's a scumbag and I want to go take his stuff. Somebody else is getting this tax incentive. Somebody else is paying less tax than I am, therefore I have a problem with it. And it's like, nobody doing anything illegal here, but it's just, to me, it seems very, frankly, un-American, whereas instead of people sort of, everybody saying, here's all the rules and we're all going to play by the same rules and everybody can feel free to take advantage of whatever rules they want. And instead of doing that, I'm saying like we should all be sort of equally miserable. We should all be, and it's just this bizarre trend now that has taken hold. But yeah, that's definitely, I think, some headwinds for Puerto Rico and the incentives, because there are, I think, so many of these, and you're going to see more and more of these kind of hit jobs. Say, look at all these evil people that are there. It's like, I mean, like it's crazy, And honestly, I mean, there have been studies and whatever, but I mean, there are the fact that you've got an island where, because of massive mismanagement, corruption, a 10-year never-ending economic depression, so many people have left. And when you have a brain drain like that, where you've got young people leaving, talented people leaving, productive people leaving, business people leaving, the people that start companies, that create jobs and all this, and what you have left behind is frankly a massive welfare state. There's a lot of really brilliant people in Puerto Rico. I should know, I've hired several of them. But you've got a lot of people that are, they're on, welfare, or they're in government and they're just siphoning off cash. I mean, it's an enormous amount of corruption. It's a joke. We could do a whole podcast about the corruption in Puerto Rico. It's honestly, it's comical. It's comical. You just have to sometimes go, are these guys fucking serious? Like, they actually did that? They actually took all these hurricane supplies and stashed it in a warehouse just so they could say that they weren't getting enough, resources from the federal government. I mean, this is insane. It's criminal, but it's also comical. It's crazy, the stuff they come up with. When you have a place like that, who's going to move there unless you provide big incentives? You have to provide big incentives for somebody to do that. Oh, gee, let me go to a place that has massive, it is wonderful in so many ways, but has massive government corruption, potholes the size of meteor craters, in the roads, where the water constantly doesn't work, the electricity is always going out, all this stuff. Right. I mean, you have to provide incentives. Mm-hmm. And by the way, individual Puerto Ricans, people think, oh, it's all these like wealthy foreigners. There's plenty of local Puerto Ricans who have taken advantage of these tax incentives. There's a lady who very well who works with me in one of my companies there, who set up one of these incentive companies. And like, you're perfectly entitled to do that. A guy who runs a whatever local accounting firm is perfectly well within his or her right to go and set up one of these incentive companies. Like anybody can do it because the rules apply to everybody across the board. And yet there's going to be, of course, it's going to be, some woke Marxist in the mainland United States somewhere saying this is unfair and we have to stop it. Somebody in the media, who's going to run some hit job about it. But of course, you have to provide incentives. And so they provided the incentives, and it's been effective because a lot of people have come and they spend, the people that come there spend an enormous amount of money that makes its way into the economy. They hire people, they create jobs, all these sorts of things, and they go and they do things. They partner with universities and all sorts of things to create niche ecosystems and industries within Puerto Rico. So I mean, honestly, like I think there's been a lot of benefit to the island that I see. But at the end of the day, it's something that you've got to expect. There's going to be some people that just aren't going to see any of the benefits. They're going to have a problem with it. They're going to whine and moan about it. And it is possible that the government decides at some point, under a lot of pressure, to drop the program. Now, the interesting thing is, if you're already part of it, you have a decree, you have a contract with the government that has actually stood up to scrutiny in a legal environment, in federal appellate court. Has actually gone to court, and the contracts stand. So you have a contract that goes on for whatever 20 years plus, where you have this tax incentive. So even if they cancel the program later, those who are still in don't lose their incentives. It's closed off to new people, but if you're in it already, you still get the same incentives. So it's definitely a reason to somebody might consider it, and you've got to consider the good and the bad. It's like, well, okay, housing prices are higher. There's still pockets of value out there. I've got to do a little bit more research, a little bit hard work to look at it. But I can get grandfathered in, under the old rules and so on and so forth. So definitely something worth considering. And I think where the housing market is, there's definitely opportunity for people that are in development and construction and so forth. If you've got a crew, a lot of experience, and the patience to navigate the mind-numbing bureaucracy that's associated with that, yeah, absolutely, there's a lot of opportunity there.
That's great. This was such an informative discussion. Thanks so much.
Okay. Yeah, good. Enjoyed it. We already know what we're going to talk about next week, but we'll talk about that next week. So, all right. Thanks everybody for listening.
Thank you. Bye.